Questions and answer for interview 1 to 10. Do like, subscribe and share my channel and press the bell icon for early notifications. Now first question, what is accountancy? Now accounting is the process of recording, classifying, reporting the transaction of a business and managing the income and expense of a business. Therefore, it is a process where we record the transaction, classify and report the transaction of a business and manage the day-to-day expense of a business. Second, what are the golden rules of accountancy? There are three important golden rules of accountancy. They are debit is the receiver and credit is the giver. First one. Second, what comes in is debit and what goes out is credit. Third is all expenses and losses are debited and all income and gains are credited. Third question, how many types of business transactions are there in accounting? Generally in accounting, there are two types of business transaction. They are revenue and capital. Now fourth question, what do you mean by real account and nominal account? Explain with example. Therefore, a real account is an account that have a running balance, means the balance of the previous year is carried forward to the next year. Examples are land, building, etc. We carry the balance of the last year to the next year. Whereas in the case of nominal account do not keep a running balance at the end of the balance year. The balance accounts to zero, like salary, wages. The balance is counted or given in the same year and it is not carried forward to the next year. Fifth question, what do you mean by double entry bookkeeping? Double entry bookkeeping is an accounting principle where every debit has a corresponding credit. Therefore, we can say debit is equal to credit. Therefore, in double entry bookkeeping system, when one account is debited, the same account or the other accounts get credited at the same time. Therefore, debit is equals to credit in a double entry bookkeeping system. Now, what do you mean by working capital, or what is working capital? Working capital is calculated as current asset minus current liabilities, which is used in day-to-day trading or day-to-day process. Therefore, the formula of working capital is current asset minus current liabilities. Now, seventh question. What is the difference between accounts payable and accounts receivable? First, accounts payable is a liability and accounts receivable is an asset. Therefore, accounts payable is a liability which refers to the amount a company owes because it purchased some goods or services on credit from a vendor or a supplier. It is recorded in the liability side of the balance sheet. Whereas account receivable is an asset. It is the amount the company has the right to collect because it sold goods or services on credit to a customer. And generally the accounts receivable normally the accounts receivable is recorded in the asset side of the balance sheet. Question number 8. What is the difference between trial balance and balance sheet? A trial balance is a list of all balances in a ledger account and it is used to check the arithmetical accuracy in recording and posting. Or we can say it checks the recording and the posting of the journal and the ledger entry. Whereas a balance sheet is a statement which shows the asset, liabilities and equity of the company and it is used to ascertain the financial position on a particular date of a particular company. Question number 9. What do you mean by accounting standards and how many accounting standards are there in India? Accounting standards is a common set of principles, standards and procedures that define the basis of the financial accounting policies and practices, and they are the primary source of generally accepted accounting principles. In India, there are currently 41 accounting standards which are issued by the Accounting Standard Boards (ASB). Now, last question. Explain the basic accounting equation. Accounting is all about asset, liabilities and capital. Hence, the equation can be summarized as asset equals to liabilities plus owner's equity. Here, owner's equity is referred as capital.